My name is Dr. Deepika Tapadia, Management, Jagannath University, Jaipur. Today I'll be discussing about some very important concept of accounting, that is GAAP, Generally Accepted Accounting Principle. This is some guidelines and standard. Based on these guidelines and standard, accountant work. So these guidelines are very important for the accountant. Firstly, there is a need for accounting framework on the basis of which financial transactions in the organization are recorded and it result into financial statement comparable. There is a need of generally accepted accounting principle, so it came into existence, which we call as GAAP, Generally Accepted Accounting Principle, are basically accounting principles and guidelines which provides the framework for more detailed and comprehensive accounting rules, standards and other industry specific accounting practices. Basically, what GAAP include? GAAP basically includes basic accounting principles and guidelines, accounting standard usually issued by the premier accounting body of the country, industry specific accounting practice to cover unusual scenarios. Next, there are basically GAAP is divided into two basic parts. First is accounting concept and the second one is accounting conventions. So firstly we will discuss about accounting concepts. There are some important concepts. Based on these concepts, the accountant do their calculations of the companies. So firstly, business entity concept, second dual concept, going concern concept, accounting cost concept, money measurement concept and accounting period concept. So these concepts I have already discussed. I'll come to the next slide, that is accounting conventions. What is conventions basically? They are the design to basically promote consistency and helps the accountant to overcome practical problems that arise while preparing various financial statements of the company. Accounting conventions are the guidelines used to help the company determine how to record business transaction not yet fully covered by accounting standard. They are generally accepted by accounting bodies but not are legally binding. There are basically 4 recognized accounting conventions. First is conservatism, second is consistency, third is full disclosure, and fourth one is materiality. So we'll discuss with the first, that is conservatism. What do you mean by conservatism? It means playing safe. We playing it safe in both accounting principle and accounting conventions. Conservatism basically refers to being prudent and pragmatic, which dealing with uncertain financial situations. Conservatism required accountant to be alert and cautious all the time when drafting financial statement of the company. This convention has an approach of assuming the worst case scenario in which the assets and revenue tend to be understated while liability and expenditure tend to be overstated. This is the worst scenario. In this approach, net income should never be overestimated and provision of all the losses of the company should always be prepared by the accountant in the company. Next convention is consistency convention. This accounting convention basically required accountant to make use of accounting methods and practices in the way that allow comparability in the accounting information from one period to the other period. It basically focuses on comparability of economic information. Consistency enables users to compare the information in economic or financial statement from one period to the other. Next is full disclosure convention. It means all the information used in the company should be transparent, should be fully disclosed. There should be transparency basically by the company that offer its financial and economic statement. There should not be any kind of misleading things. They do not mislead the users, investors, creditors and other important users of the company, the interested people of the company. True, it is said, it requires the organization to completely disclose all the relevant information to the users understanding the financial statement. It means transparency and accountability should be there in the organization related to financial data. The information should be revealed even if it is potentially damaging the company. There is always a note of economic statement which disclose a lot of crucial information such as accounting method used in drafting financial statement. The method should be disclosed. Changing in accounting methods, important event arising after the balance sheet date, and so on. Next important convention is materiality. Similar to the full disclosure convention, the convention of materiality urge organization to disclose all the relevant assets and information. If the assets or even the material that is important, it should be disclosed to the people, to the interested parties of the organization. Any information that would potentially influence the decision of the users looking at the financial statement must be disclosed. In the convention of materiality, materiality basically refers to something that matters, something that is important and significant. It should be disclosed. The nature of asset also determines whether the asset is material or not. Say for example, a 10 lakh misstatement may be negligible for the $1 million company, but if the misstatement is due to theft, bribery, or if it is fraudulent, then it is material. Next, some of the advantages of accounting conventions. We have 4 main accounting conventions. So we have some advantages. Firstly, accounting conventions assures that various businesses chronically their transaction following the same standard. Same standard should be followed in the companies. Companies cannot change their standard. This makes it easier for the investor to compare and contrast the performance of the businesses. Thirdly, accounting conventions are flexible and can be shifted and suit to the situations. Next, conservative accounting conventions assure that the financial statements are detailed oriented. Accounting conventions allow uniformity even these transactions whether accounting standards do not operate. Finally, what I can say is guidelines used to aid the organization or how to record financial transaction and maintaining the record are called accounting conventions. While they are accepted in general, they are not legally binding and are not completely covered by the accounting standard either. There are basically 4 main accounting conventions. I have already discussed it below. However, if the organization put down a guidelines that talks about the same topic as addressed by the accounting conventions, then in that case the accounting conventions is not applicable anymore. Thank you so much.